What's up, YouTube? It's Steven. Got an awesome video for you guys today. I've been kind of looking at YouTube trying to figure out what my next video was going to be. And one of the things I saw was a lot of content, a lot of video online on YouTube, on Vimeo, a lot of content talking about how to make your first $100 in the stock market, how to make $1 a day in the stock market. And ultimately, there were a lot of different videos. There was a lot of content on how to make $10 a day in the stock market. Now, the reality is most of those videos that I saw were not only inaccurate, but they were not actionable. When I mean they were not actionable, you could not walk away from those videos, from that content, and actually be able to make $10 a day in the stock market. However, there are things built into the system that you can actually choose if you want to make $1 a day, $5 a day, $10 a day, $20 a day. You can actually choose how much money you want to make per day, and that's what I'm going to show you in this video. So by the end of this video, and it's going to be a short one, just a few minutes long, by the end of this video, you will know how to make $10 a day in the stock market. And not only that, but you will know why it's possible and why it's mathematically going to happen for you. So here we go. I'm opening up the laptop. I'm clicking some buttons. I'll see you guys inside the computer. What's going on, everyone? Welcome back. We're inside the computer now. Again, I've been watching a lot of content online, trying to figure out what type of videos you guys are all interested in. And one of the videos that I see time and time again, or the type of video that I see time and time again when it comes to investor education, is how to make X dollars a day, X dollars a week, X dollars a month, X dollars a year in the stock market. And a lot of the content is about a certain setup, or a certain strategy, or a chart, or some sort of day trading thing. But the reality is there are actual things that are built into the system that dictate how much money we can make or lose in a day. Now, again, this is not some chart, some hedge fund thing. This is literally super basic. It's completely built into the system. It will be very, very easy for you to understand. So after this video, you could go out there very, very easily and be able to actually make that $10 a day in the stock market. And that's what we want, right? All right, here we go. So there's something out there called Theta that I want you guys to remember. There's something out there called Theta. And now Theta is a type of option Greek. But before we get into exactly what an option Greek is, let's get into actually Theta. So options, are nothing more than contracts or agreements to buy or sell 100 shares of stock for every option we hold at a predetermined price at a predetermined date. So the predetermined price is the strike price of the option contract, and the predetermined date is when that option expires. So every option has these Greeks, which are ways to measure price movements of an option depending on external factors such as price movement and binary events. So the way to think of Greeks is how sensitive the price of an option is, whether a stock goes up or down, whether the market crashes, whether the market shoots up, whether there are expectations of a large move happening or earnings happening. Based on how those things happen, a Greek will tell you what the new price of an option will be. So again, Greeks are something that is built into the system. They are not subjective whatsoever. They are 100% factual. Now, one Greek, known as Theta, is the amount of value that's removed from the price of an option every single day. So you might be thinking, wait, what? Yes, every option that has any value, so greater than zero, any option that's greater than zero has positive theta, which means there is a quantifiable amount of money that will be removed from an option every single day, all things considered. So right here, we're looking at an options chain in Facebook, and we're pointing to the theta for the 185 strike. So we see this line right here is the 185 strike. That is the predetermined price of an option. The predetermined date is when this contract expires, January 19th of 2018, and we could see a theta of 6 cents. So again, guys, this is not something that's very, very subjective. What theta means is theta is the amount of money that is removed from an option every single day. So if we kind of look at a chart here very, very quickly, if we have an option that currently is priced at $2.04 and it has an 8 cents theta, that tells us that tomorrow the price of the option will be $1.96 because it loses the 8 cents or $8. Right? The reason it's $8 is because every option is worth 100 shares of stock. So if you have 8 cents out of an option is really $8. Then if we go to the second line and we see a option that is worth 55 cents and it has a 5 theta, tomorrow that contract will be worth 50 cents. And the same thing goes for the option that is worth 32 cents right now on that third line. Let's say the theta is 2.5 cents. Well, the next day the mark price of that contract will be 29.5 cents. And again, guys, this is not something that's subjective. This is 100% factual. This has been going on since the day options showed up, which I think is like 80 years ago. So let's take a look at this. If we have that option that is worth $2.04 with an 8 cent theta, tomorrow it's going to be worth $1.96. If we're the owner of the option, we would have lost $8 overnight. If we were the seller of that option, we would have made $8. The reason we would have lost $8 as an option owner is because when we buy an option, we want the value to go higher. But theta is the amount that's removed from an option on a given day. So if we have an 8 cent theta and we're wishing the price goes higher, and because we have an 8 cent theta, the value of the option goes down. As a buyer, we lose $8, and as a seller, we make $8. Now we go to that option that is worth 55 cents in that second line, and it has a 5 cent theta. Tomorrow the price is going to be 50 cents. So again, the buyer of an option that is currently at 55 cents that has a 5 cent theta will have lost $5 overnight. And the seller of that option would have made $5. Remember, as a seller, we want the value of the option or anything that we sell to go down. That's how we make money. And finally, that third line item, the 32 cent option with a 2.5 cent theta. The buyer of that option overnight, because theta 100% happens every single day, it's built into the system. The buyer would have lost $2.50 and the seller would have lost $2.50. So in order to benefit from theta or this value being removed from an option every single day, as you guys might have been able to guess right now, you should want to be the seller of an option. So when we think about buying options versus selling options, we do get a lot of leverage as the buyer of an option, but we have theta working against us every single day. Now, obviously, as a seller, you still have a lot of risk, but you have theta working in your favor every single day. So, guys, this is really basic. Again, this is not about some indicator or some balance sheet or some secret setup. This is not about that. Theta is a component that is in every single options contract, no matter what. So, the question I have for you right now is, how do we make $10 a day? Well, this is pretty simple. We sell options to the point where we are collecting $10 a day in theta. Again, that is completely it. So let's go into the platform and check it out. So right here we're looking at the February options contract expiring in 34 days in SPY. SPY is the S&P 500 index ETF. So we have the S&P 500, which is an index of 500 stocks, mostly US based, that it gives a good glimpse of what the overall stock market is doing. The reason is because the S&P 500 has a lot of different stocks in it from a lot of different sectors like financial, technology, consumer staple, defense, all that jazz in it. So when you look at the S&P 500 index, you have a good understanding of what the overall stock market is doing. SPY, on the other hand, what we're looking at here is just the ETF version of that. So as you can see, we're looking at all these options contracts, and as you can tell, all of them, because none of them on this screen have a zero value, have this theta component. Now again, theta is the amount of money that's going to be removed from the price of an option every single day. So all we have to do all we have to do is go ahead and we have to create a theta of 10 on a given day if we want to be making $10 a day. The way you could do that is actually quite simple. Over here, the 277 call has a 5 theta. So if we go ahead and sell one of those, because remember, we will have a positive theta if we are the seller of an option, and the reason for that is because, again, when we sell options, we want the value of those options to go down. And if the value of those options go down, we make money. Theta helps us do that. So if we sell an option, we have a positive theta. So what you could see right here is by selling one 277 call, we have a 450 theta. So what that means, we're shooting for 10. If we just sell one 277 call, we are collecting $4.50 every single day, all things considered. And if we go ahead and we sell 2 of those, we are collecting $9 in theta decay every single day. And again, as a seller, that is something that we really, really want. So at this point, we're collecting $9 a day in the stock market. All we have to do is find a 1 theta contract, let's call it the 288 contract, and we're going to go ahead and sell that too. Again, positive theta means we're collecting money each and every day. What we've done right here, ladies and gentlemen, is we have created this $10 of theta every day, which means these 3 options contracts combined will have $10.39 removed from them every single day. So if you want to make $10.39 every day and you're the seller of those options, you're going to get and you're going to collect $10.39 every single day, because that is the theta amount that's going to be removed from those options. That is the value removed from those options. And as an option seller, we want the value of those options to go down. If that happens, we make money. So if you want to make $10 a day in the stock market, don't worry about charts. Don't worry about some crazy indicator or some crazy setup. Theta is the amount of value that's removed from an option every single day, right? As a seller, we benefit from value being removed from an option every single day. So we have to sell options where collectively we create a 10 theta. That means we will be making $10 a day, and that's exactly how you can make $10 a day in the stock market. So again, guys, the goal is keep it simple. Don't have it be something that's advanced. Don't go out and find this crazy indicator or this secret setup. Or don't read what Barron's is saying, how to make $10 a day, right? All these videos that talk about when this line crosses this line and this moving average crosses this line and then you make $10 a day. Guys, every single option in the world has a theta component. Theta is the value that's removed from that option every single day, literally no matter what, which includes holidays and weekends. So as the seller of an option, we benefit from the value of that option going down. So that is a win-win situation. We love positive theta because that removes value from the option too. So if you want to make $10 a day in the stock market and you want it to be backed by hundreds of years, you want to be backed by literally an options Greek, literally the system is backing you, you sell enough options to where collectively you get to a positive 10 theta. So if you want to go out there tomorrow, literally, or today, depending on what time you're watching this video, and you want to start making $10 a day, go out there and sell options where collectively the theta component gets to 10. I'll see you guys in the next video.